Hello there, this is James, and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to have a little chat about how the market is at the moment is sort of pretty nervous, almost like it's on thin ice. Plus further developments in the US housing situation, which I want to talk about as well. Plus the Bank of Japan again as well. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course know the risks at hand before entering any trade. With that out of the way, let's get started. So, like I said at the beginning of this program, the market, or the European session anyway, is opened a little bit with market sentiment on a knife's edge. Obviously, it makes perfect sense for the market to be acting like this because of what happened a couple of days ago on the back of that US CPI reading, which was absolute carnage to the market. As I said yesterday, it was the worst day for stocks since 2020, with the height of the pandemic and the beginning of the lockdowns. But today is open with slight nerves, slightly quieter, trying to catch his breath and sort of praying that nothing will happen, so to speak. The European session has opened slightly higher, not by much, but a little bit. The US session, there was a few gains in stocks, not dramatically, but there was a few gains. And the European session seems to sort of carry on very, very slowly, almost not to wake up a grizzly bear, so to speak. So that's where the market is. But the dollar has begun to gain strength again against the majors, in particular against the Japanese yen, because the dollar yen has actually ticked a little bit higher again today. Because don't forget, yesterday it fell by 1% on the back of rumors that the Bank of Japan was checking exchange rates with dealers, indicating there may be some sort of form of intervention. In fact, ING actually said, when there were rumors of this happening, this is a throwback to the 1990s period of serial Japanese FX intervention, where checking rates meant BOJ FX intervention desk would be asking dealers for direct price ahead of intervention. Okay, so this is why the yen got strength yesterday. However, the BOJ has simply not fallen through with anything as of yet. They have not intervened. So the market again is once again sort of looked at it and gone, Bank of Japan, you're all talk. And realistically, something else came out today. One of the Bank of Japan's officials, Katajama, he says Japan lacks effective means to combat yen's sharp fall. So this is why, again, we're seeing dollar strength. Let's bring up the dollar now and actually have a quick look at it against the yen. Like I say, yesterday, it's on a daily. If we have a look on the 30 minutes, we can see it a little bit more dramatically. Obviously, on the back of those rumors that the Bank of Japan was checking exchange rates, getting ready or prepped for some form of intervention, obviously the yen gained strength, and it actually dropped all the way down to 142.51 level. Now those rumors are subsiding, and like I said before, and I've said many occasions, it's all talk. Really, for the yen to gain some real strength against the dollar, you do actually need proper Bank of Japan intervention. And because we're not seeing intervention, just rumors, we're going to see that the US dollar has gained strength against the yen as well. And in fact, when we look at the daily again, we really have potentially, unless, like I say, we get any more rumors, or if we do, in fact, see any intervention, realistically speaking, you are looking for it to test the 144 level again and maybe head all the way to 145, which it was so close to doing on the back of that CPI reading 2 days ago. So yeah, this is where it is with the yen. Now, something else I want to talk about, and I've talked about it quite a few times, and I seem to be the only one talking about it as well, because I think this is a potential story in the making to come in the future. I really do. I really think this is a story waiting to happen. And like I said, I seem to be the only one really discussing it in detail at the moment. And it's this is the US housing crisis, okay, or potential US housing crisis. Now, it was announced yesterday or late last night in the US session that house affordability has hit the worst level in the US in 37 years. 37 years. In fact, it now takes 35.51% of household income just to pay the principal and interest payment on an average home. That's 35% of, well, nearly 36% of household income is needed to pay the mortgage. Okay. And just to put this in perspective, in January, that ratio was just 24.61%, 24.61. So we can see, like I say, within 8 months, it's dramatically increased. And that percentage is a large part of incomes, And don't forget, as I mentioned 2 days ago as well, when I discussed this housing situation, mortgage rates rose to 6% last week. And that is the highest level since 2008. And don't forget, in 2008 was the birth of the US housing crisis. Now, though I keep talking about it, and this is ironic, because just simply last night, I was watching The Big Short, the movie The Big Short, with my girlfriend, which, of course, obviously covers the US housing crisis back in 2008. And I was talking to her about it because obviously I was a trader back then. So I remember that event extremely well. So I remember the implications of that, not just on the US, but on the global market in general. It basically was the beginning of the credit crunch, and pushed the whole world into a recession, which, to be fair, we still haven't really properly recovered from. Now, I'm not saying the current housing situation in the US is any size or any magnitude of what happened in 2008 by a long shot, but I do think this is a story waiting to develop. And as interest rates rise further, because there will be rising interest rates. Don't forget, the Fed's committed to bring inflation down to 2%, which means more aggressive rate hikes. When they keep doing that, this situation is going to get worse and worse. So it is a key thing to keep an eye on. At the moment, they still have though they have a slowing housing market, still pretty robust. So it's not warnings, not alarm bells right yet, but this is something to keep an eye on, because I really think in the future, this is going to take center stage. Anyway, that's enough about that. Enough about me in the housing market. Anyway, up today, the main events, of course, is US retail sales and US initial claims. They're in focus today. Both are due at 12:30 p.m. UTC. Retail sales are expected to come in at 0%. That's retail sales, not retail group sales, by the way. That's expected coming at 0.5%, but retail sales expected coming at 0%. Previous reading was also 0%. And of course, we have US initial claims. Expectation, slightly higher number, 226,000. Previous reading was 222,000. So those are going to be key events. Really, I'd be keeping an eye on retail sales. If we get a very positive number or better than expected number on that, then I expect the market to get scared again, get spooked, because that's further evidence that there's no holding back the Fed with their aggressive rate hikes. So that would be the event in particular. The retail sales is what I'll be watching. But let's have a quick look at the market and some of the other currency pairs, how they're holding up at the moment. Let's start off with the single currency. Okay, as you can see, or like I say, again, it's trading water slightly, not surprising after the carnage of Tuesday. Currently trading at 0.9920. So still way under parity. Like I say, that key level for me, for it needs to break to get any bullish momentum, is 1.00577. The sterling, the cable, again, treading water at the moment, still extremely nervous, 1.15295. Like I said, the key level for me really is 1.1570. That's the area I'm watching on that. S&P 500, again, treading water, again, open with nerves. Like I say, everything is very nervous at the moment. It's on a knife's edge. They're hoping nothing dramatic is going to happen again after what happened on Tuesday. Currently trading at 3,948 points. Gold, okay, gold is testing this key level, just slightly testing it now. 1,694 is the key potential level for me. Currently trading just under that, $1,687 an ounce. As well as that, don't forget, we had the Ether merger today. That happened. Reaction to the market, very little. Didn't really, do anything. Not really, because I guess it's priced in. People were expecting it. They've been hyping this merger for so long now, for ages. So it was all pretty much expected. So it was pretty much a no-show. Currently trading at 1,603. Finally, let's have a look at Bitcoin as well. See where Bitcoin is. Again, very tepid, trading under that key resistant level for me, $20,355. Currently trading $20,128. So there we go. Very nervous market, very calm sentiment. I do think the housing market situation is a story to get bigger and bigger. What else is due? Markets, well, yeah. Like I say, that's it. US retail sales today, UK retail sales tomorrow, EU CPI tomorrow. Don't forget, I will be doing a watch along for that. And US Michelin consumer sentiment. The market, as it currently stands, FTSE slightly higher, in the green 0.04%, DAX in the green slightly 0.29%, and Euro Stoxx 50 slightly in the red, negative 0.16%. Don't forget, you can talk to me anytime you wish, or simply say hello if you like. Well, share with me your opinion. What do you think? Do you think I'm overblowing this housing situation in the US? Do you think I'm just obsessed with it? Because I used to be in mortgages. Or I remember 2008. Well, tell me, what do you think about retail sales today? Is that going to give fuel to the bears of the market? Because clearly the market is scared at the moment to wake up the grizzly bear, aren't they? So it's very, very sort of very nervous. So share me your opinions, or ask me questions about a pair if you like, or anything like that. Not a problem. If there is no questions, don't forget, if you think of a question later, you can put it in the comment section, either on YouTube or on Facebook. I will see them, and I will reply to them next time I'm online, which of course is today at 2 p.m. UTC to cover the US session, which should be pretty exciting today. I should hope the US should, after the retail sales, that should be quite interesting to see how the market reacts. So yeah, 2 p.m. UTC to cover the US session. So please come and join me for that. Right, if there is no questions, nothing else, not a problem. Like I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video and found it useful, what's that? I've got a question. What's this? I think it should be one, especially towards the end of the year. If US goes, you're talking about the housing market. Excuse me. I totally agree with you. Like I say, I think this is a story waiting to develop further. It's not just the US either. Canada has a huge housing market. UK has a huge housing market as well. So it's not just the US. The US is this in my spotlight at the moment. But it's a very good point. Is there anything else? Anything else I'd like to say or chip in? Okay. If there is no further questions or no further comments, like I say, if you put up with me and you enjoyed this little video, give us a like. It's nice to know that you like what I do. I can see I've got a like already, which I really appreciate it. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.